Good afternoon, everyone. I wanted to uh, do a little bit different update today because we have seen some starting to the indices starting to roll over the past few days or the past couple of days at least. And today we do have a little bit of I guess an uptick, or you can say a pause or a little bit of movement to the upside, but there's a lot of divergence in the background. And this is, I'm going to try to explain it, I'm trying to show you that way you can see what I mean. Okay, in this graph or these charts, I'm using the NASDAQ futures, and which are right here in the upper graph, and I am using the 5-minute chart because you can definitely see the divergence or the I should say the negative divergence, which I've talked about all the time. You can definitely see that in the 5-minute chart. It's more pronounced. And here we go. Let me go ahead and start. Let's look at, if you can see my cursor, it's right around 9:20, 9:30 when the market opened. And like you can see right here, we started moving up and up and up and up. Okay, but if you look at over here, here we have the volume breadth, meaning how much of the volume is moving up, or how much of the volume is moving down of the market. On this one, we have actually how many of the actual companies, or the traded companies, are actually moving up or moving down. So if starting with this, with the breadth, the actual volume at 9:30 when we first opened, yes, we had a nice push up until right about 9:40, 9:45. So let's look at over here. So 9:30 right here, right? You had, let me go ahead and do this real quick. All right, so what I did, I pretty much zoomed in a little bit on all of the charts, and I'll highlight it, the 9:30 area where we opened this morning. And again, you have the 9:30 right over here, um, right? So we started with a nice uptick with the volume, and again with the actual companies moving. You're showing that you have an uptick up and up and up, and then right around 10:45 or 10:50, which is right here, our first pretty much pause. Um, sorry about that. Right here, you started getting a little bit of which is, consolidation type, which is it's expected, but in the actual volume, you started seeing the divergence. You started seeing the distribution per se, and it all continued until pretty much 12:40, 12:30, 12:45, where you can see right here 12:30, 12:35, right over here, and we started seeing some sort of consolidation, but the whole time that you kept moving up in price, look at the volume, the actual volume, and the distribution. You started seeing more distribution, even though the indices were moving higher. Also, the actual companies, how many companies were moving lower? You had more companies moving lower than companies moving higher. So now we're starting to see a little bit of a pause, consolidation type in the in the ticks, or the actual price of the indice of the Nasdaq, but still on the and the breadth for the actual the volume, the distribution, how much volume is being sold, you're still seeing the waterfall continue. Let's. It is only a 5-minute chart, but let's go ahead and look at the other charts. Okay, so now we're in the daily charts and the regular charts I usually use, and this is the Nasdaq again, the Nasdaq futures, and we have broken down from this primary uptrend line, which it was very noticeable yesterday. Let me go ahead and zoom in, and now we're looking like we're just doing a little kind of like a back test to that primary trend line. Okay, light volume because we do have a long weekend ahead, and because of what's going to be reported tomorrow about the jobs, traders or speculators are probably going to stay on the sidelines just to because they don't want to get involved in risking their money too much. Nonetheless, we have live volume, and we're looking like we're just doing a little back test. But this is very interesting because if you look at this in the weekly chart, and this is all going to depend on how we close today, because this is of the weekly. So let's zoom in and see what happened on the weekly. On the weekly, if this week we have actually taken the highs out right there and the lows out. This could be very troublesome because depending how we close today, we could have a outside reversal, bearish reversal. What does that mean? Is that we took out the lows and the highs, and we ended up closing in the red, and that's usually a bearish signal as far as the candles go. The candles meaning these right here for the price, and we could be looking at a extreme volatility next week coming up, and it could make sense because the reports, the companies are going to start reporting, and we're so far away from the moving averages on the weekly that it wouldn't surprise me if this outside bearish reversal, if it does happen by the close today, it could be the signal, the beginning of what it could come. It could happen next week, and this is, you're looking at this for the Nasdaq. Okay, the Nasdaq, you're already looking at the curvature of the moving averages for the MACD, which is, it could be also a signal. Okay, let's look at what's going on the S&P and the Russell 2000. Alright, so I'm going back to the SPYs for the S&P 500 just to stay in the same tune that I had been talking about before in the previous updates. And here we have the channel that I've been talking about, and we broke that channel. Matter of fact, we gapped out of it yesterday. There was a little bit of a support right around this area of 139 for the S&P, and you saw that towards the end of the session yesterday. There was some buying coming in. That's why you see this tail. But today, again, we haven't gone anywhere. We're still in the red. It seems like they were trying to buy it in, but there's extremely light volume. I mean, look at this. It's almost half the volume that from yesterday, and yesterday wasn't that crazy of a volume even for the sell-off. So again, you still see that negative divergence on the MACD moving averages. You see it. You see it on the moving averages of the stochastic, and now you're starting to really see the divergence, or the stochastic moving heading down. And it's all gonna depend on what's gonna, it's only 130 right now, 140. It's all gonna depend on how we close it today. And usually the last hour is the worst, or I shouldn't say the worst. The last hour is one of the most active hours of the market. So let's look at again what's going on the weekly, just like within Nasdaq, and let's look at this. We're starting to break out of this uptrend channel, and even though we haven't taken the lows from last week, um, you could say that it's not technically a outside bearish divergence yet. Again, we have to see what happens to the close. This right here is still, to me, a very bearish signal for the week, because we going to be closing outside of this uptrend channel that has held for so many weeks. So as far as the S&P 500, the SPYs, this to me will be technically will be a bearish signal for the week, ahead. Let's look at the Russell 2000. All right, so finally we're looking at the IWM, which is the ETF for the Russell 2000, and again, staying the same theme, this uptrend channel. We gapped under or out of this uptrend channel. We couldn't get back into it, and today we've still under the yesterday's close. We're still down from yesterday, and as far as the small caps go. So still the small caps are still weak in comparison to the other two indices, the Nasdaq being the strongest. And now on this, you're starting to see that we're closing under the moving averages for the daily, which happened over here, but the difference is that we actually held this channel. We held the channel almost to the perfect, because what I did was I first did this line, and I opened it up to the bottom here, and it coincided perfectly to the bottom of the channel. Now we're starting to close out of this channel again. So let's look at how we're looking in the on the weekly, to see what the weekly is telling us. And on the weekly, you're starting to see a major reversal from this. What I have told you before, this was this breakout of this downtrend line that has been going on since back in last year, in the beginning of last year, and we broke out, but we reversed. It was a fake breakout, and we're starting to see we couldn't hold the price for 3 weeks now, and we're starting to reverse to the downside. We're starting to pretty much come back into the into this trading range that we have been in for goodness since the beginning of the year. So we haven't gone anywhere in the small caps, which is this a good tell sign of what's going, because the small caps, the people that are more inclined to risk money are going to be getting in and putting more money into the small caps because they move faster. So right now, the risk, people that are risking money, they're thinking, this is not looking very pretty. So this is we are not committing any money for the higher risk companies. So we have to see what. I know I keep saying this, but we have to see what happens to at the close right here today, and we could be looking at the small caps selling off probably to this to this weekly moving average, which will flatten out. It'll be around 70, 76, 70, 77 area. So almost 6, 7 points, which as far as the percentage goes, it's at least what's almost 10%. But nonetheless, also this is a very interesting sign. We're starting to see the crossover of the moving average of the MACD right here. Like you can see, that's going to be very important also as far as the signal goes. So, but I'll definitely keep you updated, and I'll probably do another another update this weekend to see how everything closed out. So thank you for listening. This is directionalanalysis.com.